Bitcoin is facing one of its sharpest pullbacks in years. In early February, its price slipped to around $63,000, the lowest level in more than a year. The fall comes after a long rally that pushed Bitcoin to a record high of about $122,000 last October. Since then, nearly half of its value has been wiped out. Bitcoin is now trading at prices last seen in late 2024, erasing most of the gains made over the past years. The weakness is not limited to Bitcoin. Other major cryptocurrencies are also under pressure. Ether has fallen sharply, and Solana has dropped to its lowest level in 2 years. This year alone, Bitcoin is down around 28%, while Ether has lost even more. The broader crypto market is feeling the strain as well. After peaking at more than $4 trillion in early October, the total value of cryptocurrencies fell by roughly $2 trillion by early February 2026. This sharp drop shows how quickly sentiment has turned against digital assets. This is not the first time Bitcoin has gone through a painful crash. In the past, it has seen several major drops. In 2013, prices collapsed after a rapid rise when early exchanges failed. In 2018, Bitcoin lost more than 80% of its value after the initial coin offering boom burst. In 2022, the market crashed again following the collapse of major crypto companies and platforms. The pattern has often been the same. Prices rise very fast, driven by excitement and easy money. However, when confidence breaks, prices fall just as quickly. The recent Bitcoin crash has had major effects on companies that own large amounts of cryptocurrency. There are many publicly listed companies that bought Bitcoin and other digital currencies in the previous year. These companies had bought these digital currencies due to their assumption that prices would keep rising. At the same time, uncertainty over future interest rates by the Federal Reserve and growing concerns about high valuations in the technology and AI sectors have made investors more cautious about risky assets. Several factors are driving this crypto crash. One major reason is the outlook for U.S. monetary policy. The nomination of Kevin Warsh to be the next Federal Reserve Chairman by President Trump has seen a sharp decline in the cryptocurrency market, causing Bitcoin to trade at around $70,000. Cryptocurrency assets generally react favorably to an easy monetary policy and a relatively abundant liquidity. However, the market is concerned that Warsh could shrink the Federal Reserve's balance sheet, which is negative for risk-on assets such as cryptocurrency. Forced selling has also played a key role in the decline of cryptocurrency prices. As prices declined, many leveraged traders were pushed out of their positions. This resulted in nearly $1 billion of Bitcoin positions being liquidated in a short period, accelerating the decline and deepening losses. Additionally, Bitcoin's close relationship with technology stocks has added to the pressure. In recent years, the cryptocurrency has often moved in line with major tech shares, particularly during periods of strong enthusiasm around artificial intelligence. A sharp drop in tech stocks spilled over into crypto markets, pulling Bitcoin lower. Big technology companies have lost more than $1 trillion in stock market value, according to FactSet. Amazon was hit the hardest, while other major tech companies like Microsoft, Nvidia, Oracle, Meta, and Alphabet also saw their share prices fall. The primary reason behind this share price decline is the increasing fear among investors regarding how much these companies are spending on artificial intelligence and how it will actually prove to be a worthwhile investment for them. In addition to that, wider market volatility has also reduced the confidence level in cryptocurrency. The price of gold has exhibited high price volatility due to the geopolitics of the Middle East and changes in the macro environment. The price of gold has continued to break new records, going higher and higher, as investors across the globe sought to acquire the precious commodity. At its peak in late January 2026, gold surged past the $5,000 per ounce mark for the first time in history. Additionally, the Bitcoin-to-gold volatility ratio fell to a record low of around 1.5, suggesting that for now, Bitcoin's risk is closely aligned with the volatile gold market. Institutional investors who were heavy buyers of Bitcoin last year have now turned into net sellers. Looking ahead, analysts remain divided. With the price of Bitcoin already below key support levels, some analysts believe that the price could potentially stabilize between $60,000 and $65,000. Others warn that the price of Bitcoin could be lowered further to around $40,000.